here, we're making your trades even small. Errol, we're the small exchange, but we're going to go even smaller, dude.
Yeah, because the 2-year was only like $270, I think, at some points. And that's pretty small to get into for futures.
Exactly. Isn't that funny? I'm glad that you raised that point because you've been around futures for a little bit now. I've been around a little bit longer. And since the small exchanges launched almost 2 years ago, it was a true novelty. You couldn't trade a futures contract with a buying power or a margin, whatever you want to call it, for less than $1,000. You like, no joke, dude, you couldn't find it. Like if you could find someone tell me in 2015 what futures they were trading for less than $1,000 in overnight margin, didn't exist. And now with the small exchange, and then of course, guess what? In the same year or so that the small exchange launches, the CME is coming out with micro products like it's going out of style. All of these products now are letting you access markets like we're looking at here today, metals, for a futures contract that's $500 in margin, 600, like you say, the 2 year, it's like $200, $300 in margin. Our US dollar product, I think, is like $150 in margin. And we're making that even smaller as more people get hopefully comfortable in the futures space. Because I think the most uncomfortable, and you correct me if I'm wrong, I'd love to hear your opinion. The reason for not getting into futures is how large and risky they could be, right?
Yeah, you never know when you're going to get a large move to the upside or the downside. It's nice when the large move is on your side, but there's always that risk element. And then futures, right off the bat, you hear futures, you just hear risk. So that's the main thing. And again, we've talked about it before, kind of controlling your emotions. And you're just not very emotional or as impulsive with these small products, I guess you could say. That's from my point of view.
100%. It is one of those things that it is kind of interesting where totally futures, especially 5-10 years ago, everyone was just like, oh, futures, that's just like more risk. And it's like,
even to this day, I feel like majority of people,
for sure. And it was like this idea, Errol, where it was a product that wasn't inherently, negative or positive. It was just being misused. Because it's funny, I was just talking with the small exchange CEO, Donnie Roberts, about his experiences when he's working on, Thinkorswim and some other, he's working with Interactive Brokers in these different places 20 years ago in terms of options. And he is talking about how he's having conversations with different regulatory entities in the US. And they're like, options, that's too risky for everybody out there. And now it's been with all the education and all of the access to different markets. It's like, oh, I can trade an option. I can sell it for $30 and buy it back for $15. And my risk was, $50, $60. And it's like, that's really nice. At the end of the day, options, futures, they're not negative or positive things. It's just how you use that product, right? And thankfully, these are a little less risky, and we're going to make them even less risky with a simple. We're putting them together, options on futures. But first, I do want to talk about precious metals back near their highs. Errol, you look at the all-time chart in SPRE futures, been around for just a couple of years here, but pandemic breaks out, gold and silver break out to the highs. Gold gets above $2,000. The SPRE market here simultaneously that has gold, silver, and platinum gets up to about $83. And we're right back there, but not quite there. And so it's one of these ideas, Errol, where maybe I have an idea to get short this market, or I think gold and silver, everything else is going to rip higher. I want to get long this market, but I'm not comfortable with hundreds of dollars of risk here on the y-axis. This is the notional change. So if you bought or sold a futures contract, Errol, I mean, how comfortable are you with the fact that this market high to low has moved about $1,000 in the last year? That's a good chunk of money, right?
That's a good chunk. I mean, are you saying, would I be comfortable selling outright future right here?
Yeah, I mean, as opposed to something that in the options world can move our risk down to fractions of this. This is a product that, now granted, it's a fraction of the GC futures, right? Like this thing is 1/30 the size of GC. It's 1/3 the size of micro gold, but still I mean, a few $100 in risk is nothing to scoff at, right?
No, 100%. And are you getting at to the point would I rather sell or just be, I don't know, a bigger size right here? Because I know you already showed me your SPRE position, and I like how you sold the 82 call, and you pretty much mentioned how it's 20% of the risk you would have put on by just selling the future. So if that's what you're getting at, yeah, that's something I would want to do.
Absolutely right. The nice thing about the futures is, yeah, you can trade this stuff around. It's smaller futures from the small exchange, and you only have to put up a couple $100 to take a couple $100 in risk, as opposed to, this is an $8,000 product. The stock version of it, you'd have to put up a few $1,000s at least to access it. The SPRE futures are just, I think, $600 in margin. So that's nice. But Errol, I do want to drop that y-axis, my risk and reward down. And you can see here, when you're messing with, in this scenario, out of the money calls to the tune of 20 deltas, I'm getting the same directional access. If I buy that call, Errol, I have basically 20% of the outright market. I want it to go higher, but I only have about 20% at stake in this thing. And it's also defined risk to the amount that I paid for it. If I sell it as well, I want that thing to go lower. I've got the same kind of price action in SPRE in metals, but my y-axis now, instead of having a high to low of $1,000, a little bit more than that, theoretically selling this out of the money option will get me smaller. And also, to boot, if I'm selling it, I get a higher probability as well. And you see the y-axis now, I'm looking to make or lose, instead of hundreds of bucks, like $50, $60, $70. That's a little more intriguing, right?
100%. And something I would feel more comfortable with. I think that's another reason why I never put on an options trade really in the futures product, is because I didn't really understand it. But now that when you mention it's about 20% of the typical size, in my mind, that makes a lot more sense. And I'm just a lot more comfortable with it. So
yeah, absolutely. And I guess we can call it there. It's the same thing as like, Apple and Amazon and everything else. You're trading the options on 100 shares of those markets. Here, you're trading the options on one futures contract. Same strategies and everything else apply. And yeah, I didn't want today, for instance, I didn't want the full futures here in metals. Metals are up. They're near their highs. I'm trying to get short. I don't want the full futures contract. I'm just going to sell the 20 delta out of the money call, get smaller and a higher probability.